Hello and welcome back to Money Moves Daily Japan. It's Friday, September 5th, 2025. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, the Nikkei is having another solid day, pushing past 43,000 yen again, and the yen is actually showing some strength against the dollar. Feels like a good day on the markets.
It certainly does, Jason. We're seeing a positive reaction to some major international trade news, which we'll dive into. Plus, we're tracking a surprising corporate scandal involving a household name. And later, we'll look at a key inflation indicator that the Bank of Japan will be watching very closely.
That's a packed lineup. Let's get right to it.
All right, Jason, the big news breaking out of Washington today is that U.S. President Donald Trump has officially signed an executive order. This order significantly cuts tariffs on Japanese automobiles, reducing them from 27.5% down to 15%.
Wow, 15%. That's a huge drop, especially for Japan's powerhouse auto sector. What does that actually mean for, say, an American consumer looking to buy a Toyota or a Honda? Does it make Japanese cars cheaper in the U.S., or is it more about boosting the profits of the manufacturers?
Primarily, it's a massive boost for the Japanese manufacturers, improving their competitive edge in the crucial U.S. market. It means higher profit margins for them, or at least better positioning to compete on price without sacrificing as much. We saw auto stocks lead gains on the Nikkei today, with Toyota up 1.4%, Honda 1.5%, and Nissan Motor jumping 2.8% in anticipation.
So it's a win-win, really. Japan's auto giants get tariff relief, and the U.S. gets substantial investment. I guess it's a big sigh of relief for companies like Toyota, who have been navigating a tricky global trade landscape.
Exactly. Many Japanese firms had been considering significant supply chain restructuring in anticipation of continued high tariffs. This move provides a clearer path forward, although some companies might still pursue diversification of production bases. This speaks to the resilience of Japan's export-oriented economy when faced with external challenges.
Fascinating. Let's switch gears for our next segment. I saw headlines about a major shakeup at a really well-known Japanese brand. Sophia, what's going on with Suntory?
Indeed, Jason. Takeshi Nainami, the CEO of Suntory Holdings, one of Japan's most iconic beverage and food conglomerates, has resigned. This follows a police investigation into his purchase of a supplement that may be illegal.
Wow, the CEO of Suntory? That's a massive name globally. What kind of supplement are we talking about? And how does that lead to a CEO's resignation? It sounds almost sensational.
The specifics of the supplement haven't been fully disclosed, but the key issue here is the police investigation and the potential illegality, which directly impacts corporate integrity and leadership. While some clarity has emerged from the former CEO's side, many details remain unclear. This incident highlights the heightened focus on corporate governance and accountability within Japan, especially for companies with significant global reach and brand reputation. Shareholder activism and public scrutiny are much stronger than they once were.
So it's not just about the legality of the item, but the optics and the trust. For a brand like Suntory, which is built on decades of consumer confidence, this kind of news could be quite damaging. It's a good reminder that even the biggest companies are under constant ethical surveillance.
Absolutely. It sends a strong message across Japan's corporate landscape about the standards expected of top executives.
All right, let's speed things up a bit with some quick hits from around Japan. What else caught your eye, Sophia?
First up, some positive news on the domestic front. Japan's real wages turned positive in August for the first time since December last year. This is a crucial indicator supported by steady base pay increases and generous summer bonuses.
Finally, some good news for the average Japanese worker. More money in people's pockets could mean a boost for consumer spending, right?
Potentially, yes. Next, we're looking ahead to the Bank of Japan's next monetary policy meeting scheduled for September 18th and 19th. While no major shifts are expected today, market participants will be listening closely to the post-meeting statements for any forward guidance on policy adjustments.
Another BOJ meeting. Feels like we just had one. What else?
On a more somber note, Typhoon Peipah made landfall in western Japan yesterday. While the immediate economic impact is still being assessed, natural disasters always pose a risk to supply chains and local businesses.
And a little boost for tourism in the hospitality sector, right? That's always good news, especially with the yen's movements making Japan an attractive destination.
Exactly. Tourism continues to be a key pillar of Japan's economic recovery.
And speaking of recovery and the BOJ, what should our listeners be watching out for in the coming days?
For our What to Watch segment, all eyes should be on Wednesday, September 11th, when the Corporate Goods Price Index, or CGPI, for August is released.
Corporate Goods Price Index. Sounds a bit technical. Can you break that down for our everyday investor? What does the price of corporate goods tell us?
In simple terms, the CGPI measures the prices of goods traded between companies. It's a key gauge of wholesale inflation or inflation upstream in the supply chain. If those prices are rising significantly, it often signals that consumer prices will follow suit down the line. It's a crucial precursor to the CPI, or Consumer Price Index.
So, if that number comes in hot, does it mean more pressure on the Bank of Japan to raise interest rates, potentially strengthening the yen even further? And what does that mean for my wallet or for businesses buying raw materials?
Exactly. A higher than expected CGPI would add to the argument for the Bank of Japan to continue its path toward monetary policy normalization, including potential further rate hikes. Coupled with the recent positive real wage data and resilient household spending, it could reinforce expectations for sustained inflation.
So we're back to the inflation watch. It feels like a constant tightrope walk for the BOJ.
It is, Jason. Balancing stable prices with economic growth is always a delicate act. The CGPI will give us a fresh piece of that puzzle.
Thanks for that breakdown, Sophia. That's all the time we have for today's Money Moves Daily Japan. A lot to chew on, from a major U.S.-Japan trade deal buoying auto stocks to a high-profile corporate scandal at Suntory.
And let's not forget the positive news on real wages, plus our upcoming watch item, the Corporate Goods Price Index next Wednesday, which could offer more clues on the BOJ's next steps.
Exactly. Thank you for tuning in. If you liked what you heard, please subscribe wherever you get your podcasts and leave us a review. It really helps us reach more listeners.
And we'll be back on Monday with more Money Moves Daily Japan. Until then, have a fantastic weekend.
See you then.